Hello and welcome. You're watching Market Edge here on ET Now. I'm Harsh Saita, and today we're going to be focusing on everything that's played out in markets, of course, on the day of trade of Wednesday, but also specifically with regard to IT. We've tried to cover IT as extensively as possible because there's just so much movement there over the last couple of days, and we've tried to get you all of the voices. Today we'll be speaking with Gurmeet as well with regard to IT. But first off, with regard to how markets have played out today, benchmark indices ended lower with the Nifty slipping 100 points down, but what we've seen is a fantastic recovery from the day's lows. We were up over 300 points from the day's lows, 23,400 reached from the day's lows. So decent kind of recovery. Banking stocks outperformed. The Nifty Bank rallied nearly 1%, recovering from the intraday lows. Broader markets remained under pressure, though, with mid-caps and small-caps declining amid weakness in persistent systems and Cofor. IT stocks witnessed a sharp reversal as global software shares came under pressure. Concerns over slower enterprise spending, AI-led disruption, and a rotation into semicon and AI infra names triggered profit-taking. Ola Electric rallied as investors weighed improving near-term demand against persistent profitability concerns. The bullish case centers on a recovery in monthly sales, fresh institutional funding, and progress on cell manufacturing, while the fresh bearish view points to continued losses, market share erosion, and lingering after-sales service challenges. Indigo soared over 8% after the government approved. Indigo soared over 2%, I beg your pardon, after the government approved a 10,000 crore price stabilization fund for ATF and capped domestic prices, aiming to reduce fuel cost volatility for airlines. The move is expected to shield passengers from sharp airfare spikes by providing greater stability in airlines' operating costs. Electric mobility stocks zoomed after the government approved a 5,000 crore rupee plan to accelerate the replacement of aging commercial vehicles in Delhi. The scheme offers interest subsidies and fuel support incentives for operators shifting to electric, CNG or BS6 compliant buses and trucks. And chemical stocks rallied after a sharp rise in global amine prices driven by higher feedstock costs linked to crude oil and natural gas. Global players have announced price hikes across key amine products, raising expectations of stronger realizations for Indian manufacturers. Hello and welcome. You're watching Market Edge here on ET Now. I'm Harsh Saita, with me Sajit Mangat, and over the next half hour we'll try to get you the best perspective we can with regard to the day of trade of Thursday, and we'll get you that perspective with some of our guests as well. But very quickly, with regard to our Wednesday panned out, it was a day of recovery, one more day of recovery if I can call it that. Nearly 300-point recovery from the day's lows is what we saw. 250-point plus is what it was precisely. And in terms of what led that recovery, it was largely banking stocks which drove the recovery from the day's lows. IT, which saw a 1,600 plus point decline, in fact remained in around that kind of range, 1,730 points lower on the Nifty IT index in a single day of trade. TCS leading the losses, 8% lower, but it was across the board, frankly, persistent. You also had LTI Mindtree. You had Infosys, all of which saw a knock of 5% plus across the board. You saw a knock of 5% plus on those IT names, and therefore you saw the Nifty IT index reeling under pressure. In fact, when you're looking at the recovery itself, it was also led by the Bank Nifty. The Nifty Bank rallied over 1,100 points from the day's lows, over 1,150 points from the day's lows. So while it was up just 0.9% from that 53,000 mark, we've closed at 54,186, which is a very solid rally for the Nifty Bank. So essentially, the focus shifts back to the Nifty Bank. And within the Nifty banking pack as well, you saw some very decent gains from the lows of the day. And I'll talk about some of those names. A Union Bank, a Federal Bank, a State Bank of India. State Bank of India gained 3.5% from the day's lows. Canara Bank, Yes Bank, it was the broader market names which saw some very decent gains. But even a Kotak Bank gained over 2%, Axis Bank over 2%, ICICI Bank over 2.5% from the day's lows. So you saw some of those heavyweights also participating well. Even an HDFC Bank was up 1.5% from the day's lows. So a very decent kind of move or setup is what we are seeing within the Nifty banking pack. Broadly, sectors, we did fairly okay for ourselves outside of IT and FMCG. FMCG was down over 1%. The Nifty Realty Index was down 1.4%. Outside of that, you saw the PSU Banking Index 1.7% higher. The Nifty Bank up 0.9%. I spoke about that. The Defense Index as well as the Pharma Index, both of which gained approximately 0.33% for the day of trade. But from the lows of the day, we saw a decent rally in some of those sectors as well. But the F&O setup, how are we set up for the day of trade of Thursday? Let's go across to Sajid.
Thanks, Harsh, for that. We've seen seesaw for the Nifty, but the Nifty finally ending up about 23,400 levels, and that too is led by the financials, especially PSU banks, and that's one of the reasons why the Nifty Bank is up 0.8%. The worst was Nifty IT. So Nifty Bank up 8.8%, open interest up nearly 1% in today's trade. If you look at the constituents of Nifty Bank, you'll see that long build-up seen across the board, except for an IndusInd Bank and the AU Small Finance. It was long build-up seen in private sector and public sector banks there, with the public sector banks leading the charge. The PSU Bank Index is up nearly 1.7% in today's trade. Look at what's happening in call and put writing. You will see that finally there is some kind of support coming in at 23,300 levels for the Nifty, but 23,500 continues to be a good challenge with call writing happening at that level. And if you look at the index distribution there, you will see that we are getting into a very narrow band. While the extreme support is coming at 23,000, we have 23,300 which has support, and then followed by 23,500. So every time the index is inching towards 23,500, we are seeing some sell-off which is coming in for the index there. Among the futures gainers, you have stocks which were active today. Vodafone Idea shorts getting covered there. Stock ended above 15. There's a city target of 17 rupees on that, 5% up. Indian Bank saw some long build-up, and GBTND seeing some long build-up. Stock up 3%. Some of the capital goods stocks are rallying for the last couple of days. So that's what we are seeing here as well in the futures market there. But futures losers include TCS down 8.9%. Very rarely we have seen TCS fall by that level. So there's a heavy selling which is coming in for some of the IT companies. LTI Mindtree down nearly 7.4%. Persistent down 7%. So all the high valuation stocks, especially in the mid-tier, is seeing some steep corrections coming in today's trade with IT companies, because the IT index is down nearly 5.5-6%. Among the open interest gainers, you have GBTND, where the open interest is up nearly 29%. Nippon Life saw some shorts short buying, short build up happening there. 28% jump in open interest there, and Nuvama saw 12% jump in open interest with short build up seen there. Among the losers, you have stocks like NHPC, shorts getting covered. Yesterday the stock was down over 6%. Today we've seen unwinding of 8%, and stock jumping in today's trade. Tech Mahindra is seeing a long unwind, and Angel One is seeing a long unwind there. So the index finally closing about 23,400, and that's support. That's led by a support which is coming at 23,300 for the indexes. So it's a 200 band, 200 points narrow band movement for the index, and Nifty currently in a very time consolidation phase as we speak.
Okay, that's with regard to how the F&O setup is. Let me go across to Meryl. She's here with the cues you want to keep on your radar for the day of trade of Thursday.
Yes, let's take a look at some of the important cues for investors to track on the 4th of June. Starting first with India, it's the weekly Sensex expiry, so do watch out for volatility on that front. In terms of global cues, we've got initial jobless claims data in focus from the US, while retail sales takes the spotlight from Eurozone. In terms of global earnings, we've got Lululemon set to report its results, and back home in corporate actions and board meetings, do watch out for Artemis Medicare, Saturn Credit Care, and Sigma Advanced Systems in focus as their boards are set to consider a fundraising on the day. Also going to be in focus is Dhanuka Agritech, as its 70 crore buyback is set to open on the day as well. Then in terms of other events to watch out for globally, we've got San Francisco's Fed President Mary Daly as well as BOE Governor Andrew Bailey set to speak. We're also going to be watching out for Netflix annual general meeting, where co-founder Reed Hastings will be stepping down from the company's board. Back home, another important counter to watch out for will be Maruti Suzuki, set to showcase India's very first flex fuel car. So these are some of the important cues to watch out for on the 4th of June.
Okay, thank you so much for that, Meryl. Let me go across. We've got Akshay Bhagwat joining us, Senior Vice President, Derivatives Research, JM Financial Services. Akshay, great having you. Akshay, what do you make of the move? And I'll talk about the benchmarks collectively. The Nifty Bank, the Nifty IT. What's playing out?
Good afternoon.
Very good afternoon.
So if you look at the Nifty index, last couple of days, the positive thing is that the support of 23,300 has held on. So you had volatile moves around the level of 23,300, but successful close of the Nifty above this support zone. This support holds special relevance if you're a short-term trader, because there have been multiple instances on charts where Nifty has shown a tendency of bounce back from 23,300. So if another round of bounce back matures from this support, we are again looking at upside targets of 23,800 and 24,000. So one should set up for this possible upside with strict stop losses below 23,200. Moving on to the bank index, with the bank policy underway and the conclusion on 5th of June, banking is the stronger index among the two. And clearly, with the current setup on the bank index, we are set for the targets of 55,000 to 55,200 on the upside on the short-term time frame. 53,000 is a massive short-term support, and it looks unlikely that this support should break on the lower end. So one can go long on the Bank Nifty index in tomorrow's trading session. And lastly, on the IT index, it is a bit volatile, and clearly 29,000 is a temporary support, but the setup is more neutral post today's gap down opening. So 29,000 and 30,500 is the choppy range which IT index might trade into. Would not recommend any trades in this index.
Akshay, can you give us a sense, give us your picks as well, which are the stocks you're looking at? And from today's Nifty bank movement, it seems that the PSU banks are moving much ahead of the private sector banks. So how do you look at both the baskets?
Yeah, so with the Bank Nifty clearly overperforming the Nifty index, I think one should be positioned on the momentum front in the bank stocks. And one of my picks on the banking stock today is ICICI Bank, which is at a current support zone and has shown a strong recovery tendency in today's intraday session from its support. So one can look to buy in tomorrow's market at opening for a target of 1282 and 1305 with stop loss below 1210. The second trade I would recommend is in the pharma space. The stock is Laurus Labs, which continues to move in a strong uptrend. It is unaffected by what's happening in the market, and the trend continues to be strong. A bit in a range since the past 4 days, but I think the stock should soon see a momentum pickup with upside targets working till 1510 and 1597. You can maintain a stop loss of 1354 on this buying position.
Akshay, keeping this conversation short, but the setup is good with regard to the day of trade of Thursday. It seems we'll see how that plays out. Thanks so much for coming in and giving us that perspective. All right, and viewers, we'll swim in a very short break. Come back. Plenty to talk about. IT obviously top of the pile, and we'll have Gurmeet Chadha coming in and speaking to us about that. But it's also the cabinet meet outcome. and the impact of that on some stocks in trade today. We had the likes of an Interglobe Aviation which moved. Some OMCs may also be in focus as a result of that. Sajid was telling me or discussing about just that, and we'll have more on that cabinet meet outcome as well on the other side of this break. Stay with us. Welcome back, and we continue conversation here on Market Edge. Let me bring on board Gurmeet, Chadha to come in and speak to us. But prior to that, the Indian IT index today was under pressure, and that's because of the negative setup in any case. The US ETFs, software ETFs, were under pressure. They fell 4%, so the handover itself was weak. Then you had the likes of a Wipro. You had the likes of the ADRs on Wipro as well as Infosys, which were indicating weak trends anyway. But Gurmeet, so while the setup was negative, the knock was far more negative than the setup. Now, talk to us. How are you contextualizing IT at this point? Do you go out and buy software stocks at this point? Where do you sit in terms of your view?
So thanks, Harsh. So, you need to be a little selective here. Obviously, there is some value in terms of the earning multiple. You're getting TCS at, let's say, 13, 14 times, Infosys at, let's say, 15 times earnings. HCL also is roughly about 14, 15 times. So, but, if the constant currency growth remains flat or negative, then even 14, 15 times valuation doesn't make too much sense. And there is this entire AI narrative where, look at the amount of capex the big 5, 6 are doing. I mean, Google is raising $80 billion, which Mr. Uday Kotak pointed out, right? So there's a lot of capex going there. So you have to divide it into three, the AI thing. One is the open AI, where India is, or the enterprise AI, where you have OpenAI and Anthropic, etc., where, we don't have any presence. Second is LLM, where we have Sarvam, which was showcased in the AI summit had. Third is using some LLM for creating our own applications, which is where India would come in handy. So I don't think so we're completely out of AI, but between the three metrics, if you put, we are probably there in one. So you got to be a little more selective here. My sense is that mid-cap IT has a larger ability to pivot and participate, in this as and when the implementation phase picks up, the monetization phase picks up. So I'm a little more constructive on, let's say, the likes of KPIT, Persistent, Coforge, although the valuation there is a little high. KPIT is almost 20 times. In large cap IT, you'll have to pick and choose. So, for example, we have a very small exposure to HCL Tech because it is not just the IT services. It's a nice mix of ERD, software, and IT services, right? Got to be a little selective here, and I think just don't go by the P multiple.
Do you think the transformation for which we are looking for in the IT companies, whether it's a large cap or the mid cap, it will take some time, maybe multiple quarters before the transformation comes in? Until then, the investors will have to bear this pain?
No, I agree. And I said market has enough opportunities. So it's not that only IT is cheap. Half of the index is cheap. The entire Bank Nifty is 12, 13 times earnings. If you want to compare, only from an earning point of view. Second, I think one important development could be the change in taxation on buybacks. So, for example, if you see Apple, there probably has been almost 5 or 6 buybacks in last 6, 7 years. They've actually eliminated some 30-40% of the outstanding stocks, so if you do a buyback, the number of outstanding shares reduces and the EPS looks a lot better. So I think with IT companies sitting on the kind of cash and with SEBI paper making buyback back at 12.5% at an investor level, the dividends may make way for buybacks again. And if you see, before buyback tax became tax unfriendly, we almost had a buyback of almost 25-30,000 crores every year, with IT being the key contributor. And a lot of these companies are sitting on a lot of cash with dividend yields of 4-5%. So once the buyback starts, and provided we have a little bit of better CC growth quarter on quarter, this could give a bit of a tactical bounce across the sector. But other than that, I would suggest you got to be a little more selective.
uh, investors will wait for the buyback, or would they rather like the companies to invest in the future growth?
Yeah, so I think some companies are. So, for example, Coforge has taken quite a bold bet in terms of doing an acquisition, which is much beyond. And initially, the market reacted negative. But companies taking bold bets, companies which have a niche, and companies which are showing the ability to pivot, I think you may start entering now. We've started adding KPIT, which is more auto tech, and I think the street reacted negatively because two of their largest clients, the contracts are about to expire. And then you had the unfortunate event of Mr. Pandit passing away, who's the founder MD of KPIT. That's where I think the multiple is now 20 times. Margin profile is good. There is a lot of margin of safety, and that can be added. Persistent and Coforge may be on dips, and HCL is something we have taken a very small exposure. So the index would have double-digit weight to IT. Our weightage to IT in portfolio is 4-5%. But as you rightly said, you got to be a little patient. My sense is you will see a lot of buybacks come. Once this AI trade softens a little bit, at some point of time, I'm sure it will soften a little bit. It's looking stressed. Maybe that is the time you can see some bit of tactical bounce. So some weightage tactically, and stock picking wise, go for companies which are showing signs of pivoting.
Itself, Gurmeet, how are you looking at that, and how are you playing the market at this point? What are you finding attractive?
So, as I said, we've been adding energy names, very aggressively. If you see, for example, the transmission capex over the next 4 or 5 years could be between 7 to 9 lakh crores. The peak power demand already has crossed 270 gigawatt. And you just speak to any guys in transformers, gensets, conductors. You speak to, for example, G Vernova or Hitachi. You speak to, let's say, Apar, who's into conductors. You'll see the order books, full, and they're getting more orders. So there's a lot of. I know the stocks have run up, but there is a lot of order and earning visibility. So we've added that. The cable and wire segment, which is Polycab and KI, already look pretty stretched. Valuation wise, we have Polycab in our portfolio. So we're adding, energy stocks. We just added Vari Energy. That's a full stack play from, let's say, polysilicon right up to the module, where there are very few full stack play in solar for us. Second, we have added some defense names. I think you will see more export orders in BrahMos, Pinaka, and anti-drone systems and loitering ammunition. I think these are 4 segments you should closely track. BrahMos also, if you see 10 years back, the Indian content was 15%. Today, it's about 60-70%. So with a higher export and higher Indian content, I think there'll be more opportunities coming. So maybe some of the defense ancillaries look good. Third, we've added some capital market plays like Grow to the portfolio because we believe that as and when the industry recovers, this is a high beta play. So we've added Grow. We've also added some AMC names like, Birla Asset Management, which is relatively cheaper. And funds are showing signs of turnaround with Harish coming in. And lastly, we've added a little more names in healthcare. So defense, energy, some of the capital market space, and healthcare is something what we are adding more in this market.
Sums it up very well for us. Gurmeet, last off, with regard to the rollout by the cabinet in the latest meet, I'm not sure if you had a chance to look at what's happened, but Interglobe could be one of the beneficiaries. OMCs could be beneficiaries as a result of the cap with regard to at least domestic flights using ATF. What's the sense like on Interglobe at this point? A lot of negatives built up, but the stock has held up between the maybe the 4 and the 4,500 mark. Good buy at this point.
No, we are right now neutral. I agree there's been a good correction, but there's a lot of uncertainty around war. I mean, you are not in control of flight cancellations. You're not in control of fuel prices. So too many variables at play. There could be forex losses with the way currency is moved. But if you want to play discretionary, I think if you see the auto numbers, both two-wheelers, tractors, four-wheelers have shown very good trends. I think the market is more worried that inflation and El Nino may impact sales, especially the rural sales. I think two-wheeler and two-wheeler ancillaries look good. Also, there is a lot of disposable income increase in the lower end of the pyramid, which is blue collar workers, which is, let's say, gym trainers, plumbers, electricians, etc. So we are in a situation where you are seeing white collar slowdown and a blue collar boom. Very different scenario. So I think the lower ticket, mid-end discretionary, in my view, should do better. So you can play that through some of the lower consumer durable names, some of the auto names, etc. So I'm more keen on playing that versus right now getting into aviation.
Perfect. Gurmeet, thank you so much for coming in. Really appreciate it. I know you're having a tough day, but you still accommodated us. Thank you for that.
Pleasure. Thanks, Harsh.
All right, viewers, completely timed out on this edition of Market Edge. Hope this was productive. Gurmeet gave a slew of ideas to you. So did Akshay. Hopefully that sets us up well for the day of trade of Thursday. From Sajid, myself, thanks so much for watching.